Hi everyone, it's Stuart here again. Welcome to the new trading week. It's June the 9th, and tonight we're going to look at some strategies I missed out on the last time we did this little webinar on scalping and scalping strategies. We're going to look at three ones we couldn't get through last time. I was rather ambitious last time, trying to get through five. We're going to look at pivot points. We'll have a look at Bollinger Bands and stochastics, and we'll look at the AMA or the the MAA, depending on where you see it, the adaptive moving average, along with the triple exponential moving average crossing approach as well. So the mean reverting strategies, trend following approaches, and some again mean reverting and a combination of trend following positions when we're using our pivot points and our support and resistance levels as well. So I'll do a quick run through of the slides from last time. I think we did this the end of May, the first session, but I'll concentrate on the three key strategies tonight. So I'll keep it to an hour as well. We've just gone 6 o'clock here in London. It's actually quite sunny out there, so maybe a bit of the light may not look too clever tonight, but anyway, I hope you're all well wherever you are in the world, and if you're watching this later on, I hope it makes sense. Obviously, do some screen grabs if you want, and obviously any questions you've got, contact me either directly on email or through our Discord group is the best way to get hold of us. And we are here to help you, my friends. theproptrade.com. We're very proud of what we do. We're very open. We're very transparent. It's very straightforward. These are simulated accounts, but you can make some real money once you get to the funded account stage. It's all about risk management. It's all about finding something that works for you. And hopefully some of the things I'm going to talk about tonight will resonate with you and you can apply to your trading. Scalping, lots of people get attracted to it simply because of its speed, and by that, unfortunately, everybody thinks it's quite straightforward and quite easy. No trading is easy. It should be quite simple, but nothing is easy in life, is it? If anything that's got a big pot of gold at the end of it, or a target, or a white light, or whatever it is, you've got to apply yourself. So my background, those of you who don't know me, I was in the City of London for the best part of 20 years. I relocated to Cyprus with the family at the beginning of the 2000s after the 2002, in fact it was. I worked for brokers in Cyprus for the best part of 12 years, or over 12 years. And my approach has always been really the same. It's all about doing something that's probable, keep it simple, and find a time frame that works for you, especially when you're trading. And obviously tonight we're going to focus right down on the short time frame of the scalper. But if it doesn't fit you as a human being, your psyche or the way you are made, there's no point trying to apply it because it's not going to work for you. So you've got to know yourself. That's the most important thing. And it's all about managing your risk and accepting when you're losing, you get out of a losing trade. So we'll run through these first few slides quite quickly because I say we did it all last time. It's all there out on the on our website if you want to watch the whole thing again. But some ideas I've got of getting going. The pros and cons of scalping, the benefits and the risks. I've sort of picked out six. There could be very many more. What are the attributes of a good scalper as well? As I said at the beginning there, if your personality isn't cut out for it, you may as well go and do something else because it's not for you. But the beauty of trading, and the reason it's so millions and millions of people around the world are attracted to it, is it's because it's a you business. And, anybody can do it. It's not about education. It's not about God forbid, the color of the skin or the level of your education. It's nothing like that. It's about you applying yourself and making money along the way. So we're going to concentrate on these last three here. We're going to look at pivot points tonight, Bollinger Bands with stochastics, and the triple exponential moving average, and the adaptive moving averages as well. This nice little simple system as well. So those three are the ones we're going to look at tonight. Last time we spent a lot of time going through the setup of a scalper, and then in depth we looked at Heikin-Ashi and some crossing moving average strategies as well, which work just as well on higher times as well down in these scalping strategies. So quickly, don't get don't get attached to one side or other of the argument. Are you predominantly a bear or are you predominantly a bull? It doesn't matter with scalping. You've got to be able to swap between the two. Is my approach. So get into the market. It's short-term stuff. You're trying to make lots of trades very quickly, in and out. You're not getting emotionally attached to something. You're looking for a few pips or a few pounds, points, dollars, whatever it is, to get in and out. Look at the best time of the day to be trading if you're scalping. Obviously the highest liquidity and the tightest spreads occur in the London session. That's particularly if you're a forex trader. That's the center of forex still. But when America wakes up, the United States opens up, New York session opens up. That's the best session of all of the day if you're looking at just at trading intraday. But if that doesn't fit in with your time frame, your daily routine, it depends where you are in the world. Don't try and stay up all night or get up early in the morning just to fit with that. Find something that works for you. But if you're looking for the best time, people always ask me about the best time. There isn't really a best time, but as far as tight liquidity is concerned and tighter spreads, it is that overlap between the London and New York session. So here, this line point here, obviously make sure you've got a really good connection to your site as well, because obviously microseconds sometimes can make the difference when you're scalping. And again, again, last time I just talked about concentrate on one or two pairs, 3 pairs maximum. If you're looking at forex, look at the majors, look at the dollar crosses. It's not a rule, but they tend to be the ones that follow the rules of trending and mean reverting. The better. So what's the market doing at the time? What's the higher time frame doing? What's the main news of the day? All that sort of sensible stuff. So trade with one direction. This is just some of my ideas. If a market is trending, if the euro dollar is going up, which it has been, you want to be trying to look, even in short term markets look to go with the trend. You're much more likely to you got probability on your side a bit more, even at these low time frames. If not, if you're going against the trend, just be aware of it. You're perhaps might not retrace as much as you expect it to, because you're going against the higher time frame trend. Don't be there for too long. Don't try and spend 5, 6, 7 hours trying to scalp the market. It wears you out. Understand yourself. So that's all about fear and greed, hope, regret, managing your emotions. Don't get too you can't get attached to the trade. Always manage your risk. And this, whatever type of trading, those rules still apply. But for scalping, because everything is compressed because of the time frame, everything becomes much more concentrated. So they can, these emotions can be escalated. Feel much higher. Benefits quickly. You get a high hit rate. There's no overnight risk because you're out of the positions. You're not worrying about things overnight. You're using a lot less margin than you are on bigger sized positions, because your targets and your stops are much closer. You get lots of real trades with real markets on with real feeds much more quickly. So you can get 100,000 trades under your belt much more quickly than you are if you're looking at swing trading or position trading. You've got to be able to adapt. So if you're a good adapter, that might be for you. Some people aren't, so it's they end up stuck in a position holding positions for weeks and weeks and weeks, just because they're out of the money. They can't accept losing, they can't close the position, so it's gobbling up their margin all the time. And particularly as a trend following scalper, you can get into long streaks. You can have multiple trades over the day, all in the same direction. We haven't got any problems with you doing that here at theproctrade.com. I know some other brokers do that, but instead of opening one big trade at the beginning of the day, or the beginning of the trend, or the beginning of the trend that you've identified, with scalping, you're getting in and out very quickly. The flip side of that, the risks of scalpers, is because you need a high hit rate, you do need quite high accuracy, because you're only dealing with 4 or 5 pips, 5, 6, 7 pips sometimes. Some people can't cope with that. It can be very tiring simply because of the high concentration levels. The cost per trade, this is a key one, lots of people overlook. It's much higher with these short-term trades or these scalping positions, because your targets are much closer than there would be on an end-of-day trade or a 4-hour trade. So your cost per each in the individual trade is much higher. I mean, that doesn't matter if you've got a high hit rate, but you've doing a lot of energy. You're expending potentially a lot of energy and trades to get the same amount of pip gain potentially off, like off one 4-hour trade. Where you could get like hundreds of pips. You might need to do hundreds of scalps to get a few hundred pips or 100 pips. So the other key thing is you've got to be very careful about the news flow as well. You can't get too hung up on just following your strategy, regardless of the time frame. So you need to know when the news is coming out, unexpected news, some unexpected tweets from whoever it may be. Obviously, recent news has been a classic example of that. The fallout between Trump and Musk, particularly devastating to some Tesla longs, for instance, the other day when it fell, what was it, 13% in one day. But anyway, so you've got to have your finger on the pulse of the economic and political news. Obviously, the economic data can be or is scheduled. Obviously, the other noise of the day is what you've got to be careful for. And that fine 0.5 there, you are potentially, not always, but potentially in front of your screen a lot. So your time for money exchange can be quite high as well. As I said before, the 4-hour trader might just look at his charts every 4 hours, see there's a potential for 150 pip gain or something. He places the trade at the end of the 4-hour candle. He comes back in 4 hours time or in 8 hours time whenever his candles are due, and he's either made his 150 pips or he's not, potentially. Whereas with a scalper, you could be in front of that screen for all those 4 hours and still not make 150 pips. So yeah, it's what works for you and your time frame, your psychology, and your lifestyle initially. And obviously, as I said at the beginning, the other big thing that too many people overlook is this exaggeration of our emotions, because it's our emotions we are dealing with on a daily basis. No matter how long you've been doing this, and I've been doing this best part of 30 years, it gets to you whether you're winning or you're losing. So you've got to be able to manage. You can't get rid of fear and greed and hope and regret. It's what makes us human beings. You just got to be able to manage that, bring it out of that little voice in your inner ear, or nagging away at you, and bring it to the front of your brain and bring it into your full conscious, rather your subconscious, and manage that and deal with it. And again, in a short time frame for scalpers, it becomes much more exaggerated because of that. So that's a big fundamental not to overlook, my friends. But anyway, I know it can be very, very powerful, and the idea that you've got no risk overnight is a big benefit for many. But do be aware of the calendar, what's going on. Look at the liquidity of the day. That's why lots of scalpers trade this London session, this New York overlap with London as well in the afternoon. So it's just come to an end now. 4:30, remember, is in London is the end of the stock exchange, the close of the trading day. 4 o'clock in London is the London key decision maker for interest rates across Europe. New York, 10 o'clock morning time, key time in New York for options closing and all the rest of it. So be aware of all these times that are going on during the trading day. Be aware of what's going on. Have the calendar, and just make sure that's first and foremost. So emotional control. This idea to deal with pressure. Being able to flip from one side to another, accepting that you're wrong. Lots of decisions very, very quickly. Whether this is an automated scalping system or a manual one, doesn't matter. These are all still applicable. How do you deal with stress? Do you deal with long losing streaks? Because you can get many runs where you're having loss after loss after loss. How do you deal with that? Equally, you can get runs where you've got win after win after win, and you get you feel like you're indestructible. Your decision making, so adding another lot to it, to a position you perhaps shouldn't have done, just because you've got a good winning streak, and then all of a sudden, when that does fall apart, the losses are much bigger than they should have been, because you've been influenced by a winning streak. Conditions change all the time as well, so you've got to be able to adapt quite quickly. As I said last time, look at don't have too many screens on the go at once. At one go, you can have a forex pair, you can have an index and a commodity. I like to do that sometimes, or you just focus on the indexes one day and FX another day, or whatever it is. However you roll with it, but again, these aren't rules. These are just ideas that I have and have made it applicable for me when I'm trading on the short-term basis. For me personally, I like for markets I trade. I trade if I'm doing a scalping, I will look at the high liquid markets, so the dollar pairs. I like the DAX and the Dow from an index point of view. Gold can be okay. Some days can be really quite boring. It's not doing much. I tend not to scalp cryptos. But yeah, indexes and forex tend to be the most what I focus on a short-term basis. To be honest, the Dow and the DAX is my two favorites. So that's a quick overview of what we talked about last time. We spent about 30 minutes or 45 minutes. I felt like 45 minutes last time. And we we didn't give ourselves much time for the strategies. So tonight, I've done it the other way around. We're going to look at pivot points. This is Bollinger. I'm not using the 21 EMA. It says 21 EMA. I should say Bollinger Bands. That's a mistake. Sorry. And then we're using the MMA, the moving average adaptive, or the adaptive moving average. Depends how you see. It's the same thing. It depends how it's. Depends what platform you're using, along with the TEMA, the TEMA, the triple exponential moving average. The three strategies we're going to look at tonight over the next 45 minutes. So if there's any questions, stick them in the questions box and we'll address them. But let's get going. So let's just skip through. So these are the old slides. So let's just get to where I want to get to. So I should quicker this way. Here we are. This is the pivot point one. There we are. So strategy 3 of the 5 we're gonna look at over these 2 sessions is the pivot point, bounce and break. There's 2 approaches to this. Okay, so pivot points. Let me just come on to the next slide. I hope you can see that. So actually, let's just bring in the slides. Let's bring in my trading platform. Let's look at the pivot point setup. Okay. So just close that for a minute. And it's probably easy to bring this, and I'll come back to the slides in a minute. So can you all see my platform? Let's have a look. Right, okay, so you should be able to see that. So that's the wrong layout. We're going to come back to that one in a minute. We're looking at pivot point layout. There we are. So if we just go back to, let's go to the 1 hour chart, we'll see more there. There we go. So we can see that a bit better, hopefully. So this is the pivot points I have set up here on the euro dollar. So the chart here is euro dollar. This is the pivot point template here on my proptrade.com platform, and let's just explain the settings. So my pivot points, there's lots of different you can use on the TradingView platform. I use the floor pivots. It's just the different maths that's worked out in all these different types. So this traditional Fibonacci, Woody, Camellia, they're all worked out with using different calculations. My default, and again, you can use different ones to use, but I use floor. So we use the floor pivots, and we'll set it. The time frame is set to the daily time frame. Okay, so it's calculating the daily count, the daily time frame. So when we use our count back, I'm just using 5 days here. The default on the TradingView platform takes you back 15 days. It uses the traditional type of pivot points, and I think it's it's set to auto. So so for me, this setup I use floor and daily, okay, and I only go about 5 days, okay. Okay, so this is the hourly time frame. So what we see here, and again, I've got the pivot line set at as blue, and the other the resistance to the upside and the support to the downside. I'm only showing 3 levels. Again, the settings can go on and on. You can add much more to these. These go 5, 6, 7 seconds. Some of them, some sets of support and the resistance lines. I've changed the colors to blue and orange. I mean, just for demonstration purposes more than anything. So I hope you can see all that. And basically, this is what it is showing. So the main pivot today, for instance, we roll in. So this is Monday's pivot here on the euro. Is it 114.09, 114.076? So 1.14076 is the main pivot of the day. And as you can see, for most of the day here, the Asian and European session, we were over our pivot point, didn't get to the first resistance of the day, and then we came down for an hour or two as the American market woke up here at 1 o'clock my time. And now currently we are back over the pivot point to the upside, but we haven't got to first resistance today. So from using this strategy point of view, we would have been, a few hours here and an hour or two here as we were going through this key pivot point. So the approach with this pivot point strategy is all 6 or 7 of these lines are in play each time. Okay, so we use each of the lines. The rules are the same. So whether the price action touches or breaks through one of the lines on the pivot point strategy, it doesn't matter what it is. Today, it just happens to have been the pivot point, and that is the most common simply because it is the pivot point of the day. So hopefully that sort of makes sense. So this is the hourly time frame. If we just draw this into the 5 minute, and we'll come back to this in a minute. Okay, so you can see here, there's the beginning of today. This is the 5 minute time frame. You can see there's not been that many opportunities on the euro for this pivot point strategy to play out today. Okay, we'll come back to this in a minute. Let's just go back to the slides and look at the rules of the setup. So as I said before, we are using the type of pivot point is the floor, and the time frame is the daily, and this is what it will look like on your chart. So let's go back. So let's go back to the first slide here. So pivot point, bounce and break uses a short-term time frame, i.e. the 5 minute or 1 minute, and the standard daily pivot points. This trades the price moving toward and then bouncing off any of the pivot points. So whether it's the S1, S2, S3, or R1, R2, R3, or the pivot points itself. So we've got 7 lines to play with. So it should potentially give you a lot of option. Obviously, R3 and S3 very, very rarely get touched, but when they do, they can be quite significant. It's a strong trending day or a strong either up or down day. So obviously the most useful, or the ones that get used the most, are the ones closest to the price action. So the pivot point and S1 and R1 are the 3 that get used the most. Okay, pivot points, support and resistance levels calculated using the open, high, low, close of the previous day, and these gives you what may happen going forward. So we get these full 6 support and resistance points, as well as the pivot point itself. So we've got 7 lines to play with. Default trades use the 1 to 5 minute. I've just used the 5 minute chart, as you saw on that chart there, using the standard candle setup. So the open, high, low, close setup. And the daily pivot points. The chart frame can be adjusted to suit different markets. So, but for the markets I trade, like Forex and indexes and gold, the setup fits quite nicely. So that's the setup we've just seen, the floor, the daily on the euro trade. So 2 types of approaches. We have a bounce trade and a break trade. Okay, so the bounce trade. So we're going to go long or short. These are the rules. Okay, so you enter your trade when the high or low of the first price bar that fails to make a new low or high is broken. The following list shows the steps required for both long and short. So we're going to go long. We have a touch of one of the lines, whether it's the pivot line, support, or resistance line. The subsequent price bar fails to make a new low. Okay, so we've gone up. Let's say, so we've gone up to the pivot point. We've hit the pivot point. The next bar fails to go lower. So we've hit and move higher. We fail to go lower. The following bar breaks the high of the previous price bar. So we've got this 3-step approach. Okay, so we go up. We don't go lower than where we've been. We fail to make a new low, and then the next bar makes the high of the previous 2 bars. And so that is a long trade. We've bounced off the line. Okay, so this is sorry, that's a bounce trade. So we've gone down, we've touched it, we didn't go any lower, and we go back up. And now, so we've bounced off the pivot or the resistance or the support. So whatever it is, the line has provided a bounce. So we're going long. Okay, a short trade is the other way around. You know, we failed to make a new high, so we're going low. Let me show you that in detail. We zoomed in here. Okay, so here, this just happens to be from an old screenshot from an old Reuters screen. So we've had a first touch of a bar here for the first time. So we've touched the bar on this time frame here. Again, this is 5 minutes. This happens to be, I think it's the euro as well. Yeah, euro from a long time ago, 148. But anyway, euro sorry, the first touch of the pivot is provided there. The subsequent bar, the lower high after a touch of the bar and a break of the low. So we've got a lower high. So it's not as high as we were before. So the high of the original touch was there. The high of the subsequent bar was here. So it was a lower high. And we've also produced a low. So we look to get in when the price action next breaks below here. So we get short here, here on the, you know, the second bar after the setup's been confirmed, and we have our stop loss up above the line, the pivot point, the resistance, the support, and we just trail it down, and our target becomes the next level, whether it's in this instance, this happens to be the pivot point, and this happens to be S1. Yeah, it's not written on here, but that's what we're looking at here. So we've trailed quite nicely over the next 30 or 40 minutes to our target, and then we're out. Okay, so again, you can see the things happen. What's happened here is we've had a touch and a break of the next pivot area, although, you know, it's a close successful trade. Then we go higher, and it holds up, doesn't it, until there's a break of it back here, but we'll come back to that in a minute. So that's what happens. So we have a touch of the original line. Remember, we're looking to go short here. So the low provides a new low. We fail to make a new high. We do make a subsequent low, and then we wait till the price gets back to that level, and we either enter here or even here at this candle here and trail it down with our stop loss above, initially above the line of resistance in this case, which happens to be the pivot point, to the price action moving higher. Okay, so there's a bit more of an explanation of what I've just said. So let's do this again. So we first touch of the line in question, we make a high. The subsequent candle fails to make a new high, but it does plot a new low. So we're looking to sell this at this resistance level, which happens to be our pivot point, and we get in here. So the low high after the touch of the bar and the break of the low. We sell on the break of the low after the failure. So that's the failure to continue to move higher. I mean, it's had a nice move, hasn't it? Some people would have been up here using perhaps different strategy, perhaps having the pivot area as a target area. So it's failed to do that, and we get short here, and we trail our stop loss down, and we get out, as it says there, at the next level. That's what we were looking at. Okay, so that's the pivot point bounce. So we've got to the pivot point or the support area or the resistance line, and we've bounced from it. Here we were moving up. We can't break it. We've bounced at it, and we've bounced low. As you can see here, if you those are keen eyes, you can see here it's bounced but not much, and then it's broken it, and we'll come to the break in a minute. We'll look at some live action of what's happened today. It's always great to show these screenshots, these zoomed in screenshots not in real time, but we'll have a look at that in a minute. We'll come to the breakout one. So that's the bounce. Let's just go to this. I did this screenshot earlier. This is today at 6 o'clock, just before 4 o'clock my time, so a couple of hours ago. So, and you see here the last break here for the euro on the 5 minute was a touch. It made a new high. This is actually a break. It's not a bounce on this one. Here, this one's a bounce, isn't it? We've touched the bar. The second subsequent candle fails to make a new high. We make a new low. In fact, then we go short here, and we were short. But our target was this next level here, which we've got nowhere near, and it's turned around. So we'd had our trailing stop there. We'd have got stopped out for a small loss because it's we'd have gone short here. At our stop loss just up here, and it moved down, but then didn't move up. So Monday's not a lot going on, to be honest. There's not a lot that's moving the market, so I wouldn't really be trading this today. But that's the screenshot from earlier. But if you just bring back our chart, where's it gone? It's here. There we are. Oh, it's still here. There it is. So that was that. That's that 4 o'clock one. We've just zoomed in now here into this 5 minute time frame. It's sort of moved up, hasn't it? So that's still long. But as you can see today, there's not a lot of action going on. But let's zoom in and see what would have happened. So I'll try to zoom in a bit. So again, so that one has been a touch here. It did break up, but it didn't move anywhere. It's not happened. Nothing's happened. It's bad day to be doing this perhaps on a Monday. That has touched, and subsequent candle hasn't made a new low. So we're looking to go long, and that we'd have gone long there and moved up higher, but again trailed our stop loss up. Our stop loss would have been down there. We'd have gone. That's our high, and again, very small move. Would have been out there as it's come back to our stop loss. So nothing else has happened. This is at 4 o'clock this morning. Nothing else happened. We then had another touch here at 12:30. So all the way from 4 o'clock this morning to 12:30 this morning. Before we touched another, it looked like we were going to get to R1, didn't it? This is R1 here. The orange lines, remember the blue lines, pivot area, but we touched the pivot area here, the first touch. Second touch looks like it's a bounce because we haven't made a subsequent new low, did we? And that's continued to move high. So we'd have gone long here. We touched it again, gone long here. With our stop loss here, but again that's run up and then it stopped us out. This time we've touched, looking to go short because it's like it's made a new low on the next move here. It's made a new low there, didn't there, but it did there again as it's come back down. So we've gone short here, and that's moved down again, but again not a great, because it's taken us out. So a few pips. It's very, very difficult trading this one. There's not a lot of liquidity going on with not much news going on. Remember, we're now for 2:32. Sorry, here we are 14:25 my time. London's open. New York is starting in full swing as well. So there may be a bit more action. What happens here on euro? Well, we move up. We have a touch of the pivot line again here at 15:10. What happens next? Well, the subsequent candle doesn't make a new high, doesn't make a new low either, so nothing's going on. So it looks like that might hold out. The subsequent candle does make a new low, and so we're short there with a stop loss here, and again that goes down, but then we get stopped out on the move up. What happens next is actually a touch and then a break, and we'll come on to the break in a minute. So we are long, we're instantly long here, and that's why that's highlighted there at this 1400 candle. And again, that's sort of trailing higher, but there's not a lot of action going on since, has it? But we're still, so the pivot point strategy is long because we've now not on a bounce, we've on a break approach. So we've bounced a few times. This time it's a break. Let's look at what the break entails. If I just pull this down here. So the the breakout strategy is a similar move, but we're looking for a break of the line. So here it happens to be a resistance line. So we have a clear break of on the first touch of the pivot point, don't we? It's because we're coming down, or whatever this line happens to be. We have a clear break here. The subsequent candle makes a new low. So we're looking to go short once that low has been breached again. We bounce for a couple of candles, then we make a new low again. So we're in on the close of that candle here, and then the big follow through comes through here, and it runs all the way down. And that's that. Whoops, sorry. The root. Oh, sorry. The rule with the pivot point is that we are. Oops, come back too far. We are looking for the next level. It's not clear on that where the next level is, as we saw. Let me just bring back the live chart here on the euro. You can see we are long here. So we've touched there, and then we've broken on the subsequent candle. So we've gone long here at 114, 13, 15, and we're still long. Stop loss is probably back down here, and it's marginal 114, 20, so we're about 5-6 pips to the good. It's gone nowhere really today, has it? This particular asset. We've been sort of meandering around the pivot. You can see the ATR. This is the ATR is very, very small here on this 5-minute time frame. But if you look at perhaps same approach with a different asset, if we look at the DAX, for instance, or one of the indices today, look at the similar position. So this is the Dow. So this is obviously with the indices, you obviously got a key action when the actual cash market opens, and that's what you can see there. You can see we've been above the pivot point, all the pre-market. There's the opening candle of the day, the first 5 minutes. Zoom that up, sorry. So there's the opening big candle of the cash session. It breaks. It doesn't make a new. The second one doesn't make a new low. So that it looks like it's bouncing. It didn't because it then reversed and broke lower. Then reversed. It's just not playing out at all, is it? Until on the open, until we've got this subsequent candle here at 16.15, where we've touched and actually moved higher. So we touched. We made a new high rather than a new low. So we were looking, that's bounced. So we're looking for a break this time. It hasn't bounced down. Here it broke down and continued. There we've had a minor break up, but we can't move away from it. And again, but we'd still been in the money on this one, because on that candle there, that 16.15 candle, our stop loss would have been down there a wee bit. It's moved higher. So we'd be looking. Perhaps are we going to get to our one? I don't know, but I'm nicely trailing my stop loss up here. So the index here finally played ball from a few failed trades, and from the say that's 16.25 candle. Right, I was using the DAX earlier with on the 5 minutes. So let's just go to the DAX. So a failed short, failed break, and then a successful long trade here on the Dow at the moment from, as I say, 16 that first candle there, 1635 was the, let's just put that line in for you, because that's the confirmation of the break. So there's the touch. So there's the original touch. The subsequent candle didn't make a new low, did it, to go for the bounce to play out. We actually finished high. We didn't make a new low. Next one didn't make a new low here, and then that green candle there at 1615. So the original touch there at 1600 looked like we were going to have a bounce set up, but it didn't work out. We made a new by 1615, 3 candles later, we'd made a new high. We'd actually gone through the pivot point, but we hadn't broken it. Then we went, looked, we were going to go down, but we'd broken over, but we didn't make a new low either. Didn't make a new high, didn't make a new low, so it's not playing out. It's not until we have this 1635 candle here, this break above the pivot point, very small again, but it's, it's significant given it's 2 hours into the session. It's the close of the European session, well around about this 1635, and now we move high. So if we confirmation would have been on this or this candle, but we're long. Our stop loss initially would have been just below these low areas, wouldn't it? Keep it nice and tight below that pivot point area. Currently now my stop loss would be round about here at 42,784.70, and we're ticking higher still, so I'm trailing my stop loss up. If this continues to move higher, I might drag it up a wee bit more, but not get too. Next candle might 42,801. So it's going with us. Remember, we still got a full half position here on the US 30 from our end of day trials, but this is the scalping strategy pivot point working out as well. We're at 42. I need to crack on because I've got 2 more to get onto you. Okay, so let's just quickly go to the DAX, and I marked up the DAX. I thought I'd marked up the DAX. Did I not? Is it not? It wasn't on this strategy, on a different one, I think, wasn't it? Oh, I thought I'd marked DAX up, but anyway, let's crack on to the other strategies. That's the pivot point strategies, both the breakout and the bounce. So we use the 7 lines for bouncing or for breaking, and we're looking for for the pivot point to work is either as a resistance or for it to be broken. So that's what we're looking for. 2 types of approaches with one strategy. Okay, so next one we got 15 minutes now. Talk too much about things. So this one we're going to use Bollinger Bands and stochastics. So perhaps a different setup, but again we're looking at a mean reverting type strategy. We're going to use pretty standard settings, but I've tweaked it a wee bit. So we're using our Bollinger Bands with a standard countback period of 20. But we're going to extend the width of the Bollinger Bands. We're going to use a wider standard deviation. Standard setting is 20 and 2. I've added a little bit. I haven't got all the way to 3, but I've added a deviation of 2.5. So we're capturing things a bit more. Stochastic setting is a wee bit different to what you might expect and what you see in standard settings. I've got my K line, so I've got 10, 6, 3 basically is my settings for stochastics. The K is 10, percentage K smoothing is 6, and percentage D is 3. So K is 10 and D is 3. We don't change that, but it's 10, 6, 10, 6, 3 for my stochastic settings. I'm looking for a touch again of the Bollinger Band, the extreme outer, the upper or the lower, and then for a mean reverting back to the center line and then back to the other side of the Bollinger Band if that plays out. So what does that look like? That's what it looks like on my setup. So here's the stochastics 1063. See our overbought and oversold parameters still at the 80 and the 20 area. We're using those as standard. So we're looking for crosses basically in the K and the D line. If the cross takes place in either the overbought or the oversold region, even better. As you can see here, that one there, or whatever this is the DAX on the 5 minute. You can see how it's it's at the extreme of the Bollinger Band here. That they don't coincide till here. We see that crossing, and we've got a nice run there to the from here. That's the entry there, run there, and then run there. So we've got a nice move. On that strategy there. We'll look at the actual setup. So what we're looking for to go long off of short, we're looking for the entry candle to close below the Bollinger Bands. We can, you could just, that's a perfect entry where the candle closes below the lower Bollinger Band. We can use it, you know, if you want to drill down for scalping strategies, you can use it just as a touch of the Bollinger Band and wait, but you'll see how that plays out. Then we're looking for a cross in stochastics like we've just seen. So the K line to cross up and above the percentage D line. And I've put 2 targets here. Take 80% off when we get to the midline and leave 20% off still if it's, and trail your stop loss up in this case because we're going long. With 20% to the upper Bollinger Band, stop loss below the lowest low of the entry candle or the previous candle. Does that make sense? The flip of that is the short position. So we're looking for a break above the Bollinger Band, and then we're looking for a cross on the stochastics. So again, with targeting the midline as our first target. We trail our stop loss down as the market moves down. So we initially start above the highest high of the entry candle and then move down. What does that look like? As you just seen, it looks like the previous 2 slides. I've got back a few slides. It's not working. But there we go. That's what it looks like. But let's bring in the live feed from TradingView. Just get rid of that. And we are now looking at our Bollinger Band and stochastic setup here. Okay, so this is the one I looked at previously. So this is what we're looking for. So this is our Bollinger Bands with settings, as you can see, 20 count back and 2.5 standard deviations. So from this morning, I was marking these up earlier. So from this morning, we had our first touch. I'm going to ignore this again. This is the opening 8 o'clock time, so I've ignored the lots of action going on there. So from the open move down to bounce back up. So the last after this move, you can see that worked out quite well because it's down there. But anyway, let's have a look at this one, the 10 o'clock one. So we then here at 9:55, we then touch the outside of the Bollinger Band. We haven't actually closed, you know, the rules saying about closing out. I'm happy to use it just as a touch. The next touch the entry was the following candle here at 10 o'clock exactly, where you can see the cross of the stochastics line there. So we've gone short here, and our first target was just, I mean, it wasn't far away, but our stop loss was above that the high. Our first target was there. It's, you know, a winner. And our second target was the lower Bollinger Band, which happened within 10 minutes of that action. So thank you very much. Wasn't a great win, but it was a winner, wasn't it? Okay, so what's happened next? Well, we've touched the outer Bollinger Band again here. We've had a close below it, so we're looking to go long, really, is the rule. But we don't get a cross of stochastics until this next line here at 10:45. So we've had a winner at 10 o'clock. 10:45 clicks in because we've already touched the lower Bollinger Band. We're waiting for a cross of the stochastic here. And here, like the cross there was in the overbought area, here the cross is in the oversold area, even though the price action's going flat, isn't it, on entry? So, but we get in here at 24,172. Goes against us initially, but eventually by 11:30 we get to target 1. Again, it's not far away, is it? Our stop loss would have been initially down there. We might have, in fact, we would probably been stopped out on there because our stop loss, if we'd had it the lower Bollinger, a lower Bollinger Band at the initially, because remember we're going long here, so the low of the day would have been here. So that's where it probably should have been ideally. So we might have stayed in and actually got that up trade. Otherwise, if the stop loss had been a bit too tight on the day, but you know, we were so close to the low of the day, we're happy to use that low of the day there. So that would have been a winning trade. Didn't get to target 2, didn't get to the other side of the Bollinger Band before it started to decline, and again we'd have been stopped out. So we'd have won 80% of our trade, and the 20% would have been stopped out. What happens next? Well, we haven't had a touch of the Bollinger Band. We could just about count that one, but it's a weak one, isn't it? It's a very volatile candle there at 12.15. So it doesn't really touch the Bollinger Bands, and the cross didn't work there. The next proper touch of the outer Bollinger Band. Remember the touch of remember, this is the right order as well. We're looking at it 2 steps. The Bollinger Band first, then the stochastic, because the stochastic, remember, chops around a lot, can be very, very choppy. I've minimized, I've reduced the choppiness of the stochastic. Remember when you have your stochastics at 14.33 when they come out standard, they're very up and down. So I've smoothed it out with this 10.63 setting. So the next touch of the outer Bollinger Band is here at 12.45, but again, the stochastics don't cross. And again, it's in the overbought area, so it's looking quite good until this candle here at 13.10, but we don't get that, wouldn't have actually figured until the following candle. So we'd have gone long there, and again, our stop loss would have been down at the low of the day, so we were at risk of getting stopped out potentially, but that's the low that we got in here, so we'd have pushed it a bit low anyway. So we got, again, another winning trade to T1. T2, we didn't get the second target. It's come back down, and again, if we'd moved our stop loss up quite aggressively, we would have been stopped out there on the second half of that trade. Next touch of the outer Bollinger Band was here at 14.30. We next get a trade here, or the cross of the Bollinger Bands again, and it didn't quite get, and again, it might have took us out if we'd moved our stop loss down too aggressively. In fact, it might, but it did eventually get to target 1, which is the midline. So chance of a potential winning trade there. Then we had another stop here at whatever that was. That's 16.45 before we actually get in on the cross, because we've had a touch there. We got to wait for 1, 2, 3, 4, 5 candles before the stochastics cross there, but we wouldn't have had confirmation until that. That position there at 24.173 would have got to our target very quickly, and then it's not got to second target, and it's come back against us. We've got a cross up here. We've had whilst we've been live, we've had a touch of the Bollinger Band there and a cross, so we've gone short. Hang on a minute, what's happened there? We had a touch of the, because remember the time of the day as well here, and what's happening here. This is the DAX. Remember, the market's closed 16.30, so volatility's gone down. So whether we should be trading this at this time would be questionable to get a short position. But that's still saying the rules of triggered there, because that would have been, so that's not an access. That would have failed because we would have had our, well, it's out of the money, let's say that, if we'd had our stop loss up there, but that's sort of trending to the upside now, so that hasn't been reversed. But remember, when you're doing the indices, be aware again of the time frame. So if you're going to scalp the indices, the best time is obviously when the actual cash market's open, or closing. Obviously here we closed at 14.30. So these subsequent two have been outside of the cash trading day. Obviously, at the moment, the Dow is, it is a cash session. So again, this is where have we crossed here? We've gone long here, got to target 1, and it's still long. There you go. There's a really good example of how it can work out to your benefit, having got long in here. It's a bit messy that. Got to target there, and it's continuing to track higher. We haven't touched the Bollinger, so it hasn't gone short yet. This because we haven't touched the outer Bollinger Band. We haven't got the short position. So the long position would still be playing out quite nicely there for the Dow as we go to 42,800 and probably highs of the day. Okay, again, I've talked for too long. I'm going to get legs chopped off here. But final setup is we'll go through this one. So that's the Bollinger Band setup. We're looking for touches of the Bollinger Band and then a cross of the X and the D, the K and the D line to run to the middle of the back to the midline on the Bollinger Band. Okay, so as I say, it's great for mean reverting short-term timeframes, but if you've got a strong trend, it's not going to work. Just as we're proving there in the Dow as it's moving to the upside. So finally, I was wanting to introduce, we literally only got 5 or 10 minutes here. We're looking at two moving averages here, or not moving average, but two lines on your chart. Let's call it that, lines on the chart. So we're using the AMA, or the adaptive moving average, or the moving average adaptive, as they call it on TradingView, and the triple exponential moving average. We use the power of the adaptive moving average. It's really useful because it works on volatility and momentum, and it's looking for recent changes. So when the MAA or the AMA is flat, you really want to be questioning whether you're actually taking a trade or not. What you want is the cross of these two moving out, these two lines, these two moving, let's call them moving averages, because that's what they are really. These moving averages, and them to be both, with you. Okay, so the triple moving average is exactly that. It's a combination of three moving averages in one line, and we're using the 16 period countback. And the AMA or the MAA, we're looking at 9. Okay, so if both moving averages are sloping, that's when it's really powerful, especially once they've crossed. So that's what we're looking for. Avoid or question whether you take the position, even though it's can be quite legitimate, when the MMA or the AMA, as we call it, depending on how you look at it, is flat or horizontal, because it's measuring recent volatility. If there isn't any recent momentum, volatility, changes in sentiment, it tends to be flat. So what does that look like? Well, this is what it looks like on my old chart. This is what we look at here. So you can see the orange line here is the 16 period triple exponential moving average. And you can see they're cross like moving averages. But as you can see, the AMA or the MAA, that's set at 9, it's trending, then it's trending quite nicely. Then here, look, it's flat. We want to be out here when it's flat. We want it when it's moving. So here on the euro, this has been a bit more useful than the pivot point, hasn't it? So again, this is a screenshot from today. And let's just bring in, we'll come back to this in a minute, but let's just bring in the chart again, which has disappeared again. Where's my chart? So this is the my charts again. If we load the, I think it's on demo, isn't it? Yeah, there we are. So here we are. So we've got the triple exponential moving average, which is the orange line, and the moving average adaptive, or the average moving adaptive AMA, set at 9 and 16. They're the two settings. So here on the euro, sorry, this isn't euro, this is the Dow. So here again, can you see how useful the adaptive moving average is? We've got a flat here, right? Still only 5 minutes. We've got flatness. So just stay out. Yes, we've had a cross here. If you were really aggressive, you would have gone short there on that cross. But for me, nothing's happened. It would have been on this candle. We've made a new low. Again, you want to plot in, when's the market opening? Well, this is the market open. This is the 1430. So we were going low into open. So we would have given us a heads up, hasn't it? So we would have gone short there because we've crossed the TMAs, crossed below the AMA, the flat running AMA. But when they're both moving, that's quite nice. So we would have got a nice short there. Then we've got this peak, this bounce up. Remember how we didn't play it out with the mean reverting strategies? So we've got an initial time cross there, 16.15. So we've gone long here with our stop loss down here somewhere. And then finally, sorry, they haven't crossed. We've had a break. We're above both the lines, and that's a key thing. The caveat on that entering there on that 16.15 candles, you can see that the AMA is still flat, having been trending nicely downside. So again, this is for the aggressive traders getting in at 16.15 here with this setup. Gone long here at 42. 42,675, and we come back. But if you'd had your stop loss down here below the, or even all the way down here, this low of the day, it's still played out quite nicely for you, hasn't it? Because you've had a very powerful cross. So you'd have got in there. And again, the more aggressive traders using this, you go long or short when they're in the right side of both the lines, basically both the moving averages, and then add to their position on the cross. The cross obviously can be late, and it might not already play out, but you could have added there, and then added again there. If you're playing this really aggressively, that's why I like to use these when we've got a strong trade. Also, we didn't know that this was going to happen, bounce back, because we'd already moved down into open, haven't we? So we're fading the opening move. So the opening move to the downside there. Remember that's the opening 14:30. So by 15 or by 4 o'clock, say now 90 minutes in, we've plotted our low of the day, and then since then we've moved higher. So we've been long there, and we continue to be long. You see how they're like with moving averages, they're in alignment. We've got the triple exponential moving average much closer to the price action than our AMA, and our AMA is nicely. So this is a really nice move up, and we would have our stop losses of those 3 entries moved up. We might have got taken out as we touched the AMA again, but again, a new strong candle there. You could have added again there on that candle there at 17:10. London's closed by 17:10 my time here in London. Obviously, it's all over to what's going on in the US, and off we go. We continue to move higher. Obviously, little news today. We got the Americans and the Chinese meeting. There might have been some news since I started talking to you about an hour ago, but this is very nicely in the money and to the upside. So again, 5-minute time frame on the AMA here with the Dow, similar setup with the DAX. Move higher. There's the flatness. There's the long entry there up, but you see we come back to it, much more ziggy zaggy there. But you can see we're still in alignment, even with the Dow here after the hour. So it's much clearer here than the Bollinger Band and the stochastic strategy, hasn't it? This is where we're much more successful on this strong trend, because this is a trending approach, whereas the last one we looked at, the Bollinger Band and stochastic approach is much more trying to capture the retrace. It's a mean reverting strategy. So as the trend day starts to move to the upside today, the trending strategies are playing out better than the mean reverting strategies. So you can see here, although it's very choppy, the moving average, these moving averages, the AMA and TMA, are still aligned, and we're still moving up to the upside. So, but you might have been taken out a few times there. But again, new high there. That would have been a nice entry there, 1750. 10 minutes or so ago, and off we go, and we're moving higher. Continue to move higher at 24,200 was tested. There you go. There's that round line on the DAX. And finally, before I wrap up, let's have a look at the what it looks like with the euro. Similar strategy again. Was it the euro we were looking at before? I think it might have been. Yeah, and there we go. See what's happened here. There's a good example. You know, we'd have been into this. The crosses is here, the flatness, but then we got a new high. We got in here and off its run, but we've come back quite aggressively. But as we trail our stop loss up, as we're moving up, because remember we're scalping this, you know, we'd have got up here, and we'd have been that's our stop loss. We'd be taken out there at 114.18.9 as we've come back and tested that, and now I'm out, because this is not doing anything. We've got a flat. Remember, the flatness of the TMA of the AMA keeps us out. So stay out till we got some sort of direction. Obviously now it's late on a Monday. Europe's closed, London's closed, the Americans are open, but we've got no action. So I'd like to, you know, again, just price action wise, I'd like to break the 114.25 if I was going to take this long. We might move down back to the 114 area. 25 pips takes us down to the 114. There's 114, the big dot. But you know, we've had a nice little move recently and taken, you know, best part of 20 pips out of that, haven't we? Here this morning, we'd had a nice old move all the way down from 11 o'clock from this high here at 36, all the way under 114, all the way to the bottom here before it turned around and took us out. So horse to the course, my friends. All these strategies work. They all work well enough. How you apply them is up to you. I've given you the rules. I've given you the options. Do come and join us at theproptrade.com. We're here to help you. And remember, here's our website. Thank you for your time this evening. We do appreciate your time and efforts. Remember, as a scalper, we are looking to you know, move in and out very quickly. all these strategies work. As I say, my friends, it's how well they work is how you apply them. My trading books we talked about before, some recent books. There's a new one come out. I've got an order also from Harrington. This is the publisher, Harrington House. I'll let you know about that in the next couple of weeks when it comes through. It sounds fascinating, but guys have been writing it for a while. So thank you. As I say, theproptrade.com is our website. Get over there if you haven't got an evaluation account. Why not? Come and join us. We're here to help you. Okay. Thanks for your time. Take care, and we'll see you all again next time. All the best, everyone. Bye-bye. See you tomorrow. Tomorrow, actually, we've got another education setup. We're going to look at market gaps, the key gaps on your charts, how to trade them and how not to trade them. You know, the important ones and the ones that happen all the time. So join me for that same time tomorrow. So take care.